Welcome to the pre-market insight for May 6, 2020. We have some action in the pre-market that we need to be aware of. Let's take a look at the charts.
First of all, we always need to be aware of the market environment that we're in when we are looking to interact, to even judge whether we ought to be interacting with the market, given our trading style, our account size, our investment objective, our risk tolerance, and so on. So the first thing that we need to establish is that we're in a period of consolidation. Volatility is coming out of the market. Ranges are contracting rather than expanding. And we said for quite some time that until the major components such as Apple, Amazon, Google, Microsoft, Facebook, until those names that create, that account for more than 40% of the NASDAQ and just about 12.5% of the overall US equity markets, until those names report, the market would simply go into a time of consolidation. Now that we're having that time of consolidation, we now have some other forces coming into play. If we zoom down to the daily chart, you can see here that we have this gap right here, a close at 28.82. And if we actually use the SPY instead, it's probably even, it doesn't show up on the SPY, so we'll use the ES. So we're looking at this 28.82 level, and in yesterday's price action, we came up in an attempt to fill that gap. We did on the ES. We made a high at 28.89, but then we fell back down to close at just around 28.59. Now, if we zoom back out to the 4 hour, just so we can get some context as to the importance of this level, there we go. So we've been talking about the importance of this level here, right here, between around a high of 28.70 to a low here just at around 27, call it 27.30 to the downside. That for quite some time, the market has been trapped, has been caught, has accepted fair value for its future earnings within this particular range. And until and unless we break out of it one way or the other, we should just simply accept that this is fair value. It has been attempting to do that for quite some time now and has been unsuccessfully been able to do so. So, very important, yes, in yesterday's price action, we came down to test this level here at around 28.32 on the ES, just at around 5 a.m. On the overnight in Tuesday's pre-market trading. And thus yet we have not come in the regular trading hours to test that level, but that level may be on the cards before we go much higher. You can see after yesterday's sell-off, we had just a bit of a dip in an attempt to possibly come down to that level, but we made a higher low at 28.43. So going forward, the two levels that we definitely need to take into consideration this morning is that 28.43 overnight low, and then we have yesterday's high at 28.89. Now, that is not to say that we cannot break out of either of those two levels. What we want to be on watch for is the response of buyers and sellers if and when we get to either of those extremes, because it is their response that is going to give us the cue, the key nuance that we need in order to be able to perhaps extract value from the market with the hypothesis, long or short, depending on your particular bias. Now, we do have some important numbers coming up tomorrow and Friday that reflect the ongoing state of the economy in terms of unemployment claims and job numbers. That is not to say that we are not aware that the economy is probably in particularly rough shape and the stock market has been acting quite disconnected from that. Remember, we speak about the fact that the market is a discounting and or marking up mechanism. So it is not what is actually happening today, but it is the sentiment or estimation of what will happen in the future that the market takes it skews from. And so at this point, given the fact that we had this nice little downtrend, this nice little pullback on Thursday and Friday, which accounted for just about from the high here 29.65 to the low here at 2770, we literally was almost close to 200 points just on that pullback. So it is quite within the range of possibility that we would see this relief bounce. Where do we go from here? Key levels 28.43, key level 28.32. If we break that to the downside, then clearly we have Sunday night's low at 27.70 right above us. If we go to the upside and we break this 28.89, yesterday's high, then we are targeting 29, at the very least 29.21 to the upside, just at around 292.50 on the ES. Now, if we just take it back to the higher time frame once more, recall that we are currently range bound. And so even if we were to get above or below those levels, it may simply be a continuation move into this level here at 29.84 on the ES, or to the downside, we have this 25.50. Let's go back to the 4 hour. We have this level right here at around 25.20, you can call it, that started off this entire move to begin with. So keeping it simple, smarty, know your levels for today, align your actions with your account size, your time frame, your risk tolerance, and your investment objective. No one can do your push-ups for you. You've got to do the work. Be safe out there today.